Hi, everyone. My name is Susan Geist, and today I'm going to give a short presentation on how to use the tax bucket formula in your own tax planning to simplify your own tax savings. So just a quick disclaimer. While I love diving into investing in tax data, I am not a certified financial professional or accountant. So this is not personal financial or tax advice. This is for educational purposes only. Always do your own due diligence based on your own personal situation. So the two biggest wealth killers are inflation and taxes. There's not a whole lot, unfortunately, that we can do about inflation, but luckily there is a lot that we can do about taxes. So what prompted me to get into learning about tax strategy and doing my own tax planning, I received a federal tax bill in 2021 that was $137,000, which I couldn't believe. That was higher than my W-2 income. And I didn't understand why some of the losses that I had from my real estate portfolio and from my stock portfolio weren't offsetting my W-2 income. So I started learning more about tax strategies, and becoming more versed in these different strategies that I could use, especially looking at tax planning from a bucketing perspective. And so in 2022, after doing this tax planning, my federal tax bill was only $6,500 with higher income that year. So the goal of the tax bucket approach is to simplify how you look at your tax planning so you can gain the clarity and confidence to understand and potentially lower your tax bill by thousands of dollars like I did. So let's get into the tax bucket formula. So the IRS divides your income into 3 income tax buckets. Over here in the red bucket, we have active income. So this is going to be your W-2 income, 1099 income, hourly income. If you have your own business, your active business income is here. If you self-manage a short-term rental and you meet the requirements for that, that'll be over here. If you're an active house flipper, any Roth IRA contributions and 401k withdrawals will all be in this bucket. Portfolio, this is what you think of typically as your investment accounts, right? So any stock and bond sales, dividends that you're getting, interest, if you're doing owner financing, private debt funds, and any sales of non-business assets. So if you collect classic cars and you are selling those for a profit, that would be here in your portfolio bucket. And then over here in the passive bucket, we've got rental real estate syndication income, royalties, any passive business income that's reported on a K-1, and your short-term rentals if you have a property manager. So these are things that you're receiving income from, but you're not actually actively participating in that business. So here is just a very simplified diagram of the tax bucket formula. So you can see here we've got the 3 different types of income coming into their buckets. And then there are also deductions that you can pair with each of those types of income coming out the bottom. And so the goal of this tax planning strategy is to figure out, okay, what types of income do you have coming in, and then pick and choose the type of deductions that match that income and reduce your tax bill. So let's see it in action. So one of our clients came to us. I'm going to call her Meredith. Her name's been changed. She was filing single. Her income came primarily from her W-2 job and stocks. So she had active income and portfolio income. She was open to investing in real estate, but her primary goals were to reduce her annual tax burden and diversify her income streams. So she wasn't entirely reliant on her job. So let's take a look at what her income looked like when she came to us. So she was making $200,000 at her W-2 job. This was a tech job. So one reason why she wanted to diversify her income, because she wasn't sure with the way the economy is going, whether she would continue having a job even. And she wanted to have some other sources of income to rely on. She also, in her portfolio bucket, was making about $10,000 in stock dividends every year, $10,000 in interest off of her savings. And then she had done some long-term stock sales this past year and made $20,000 in capital gains on those. So As you can see, she had 200,000 in active income and 40,000 in portfolio income. So her current tax burden, just in this situation, her single person income is $240,000. That puts her in the 35% tax bracket. So it's the next to the highest tax bracket. After the standard deduction, she can take her approximate tax due is $53,000, which is a significant amount of her income. So let's show you what we did in looking at her tax planning. So the first thing was to catch the low-hanging fruit with those tax-advantaged accounts. So we wanted to make sure that Meredith was maxing out her 401k, her health savings account. We suggested she put a little bit of money into her limited expense FSA that she was eligible for. So those right there, low-hanging fruit in the active bucket, which a lot of people can use to decrease their taxable income. The next thing we had her do was somewhat unique to her. So she owned a home, but she also had a garage apartment that was detached from her house. And so we actually suggested that she convert that into a short-term rental and manage that herself. And so she decided to do that. And that allowed her to obtain short-term rental active management status and actually consider that short-term rental as an active small business in the IRS's eyes. And so she was able to take bonus depreciation that first year on that. So that was a significant amount of loss. She was able to write off all of the 5 and 15-year items, depreciated items in that short-term rental. This also allowed her to start deducting some of her regular expenses as business expenses. So like her utilities, her lawn guy, her cell phone, the parts of that that now were attributable to the short-term rental business, she could deduct on her taxes as a business expense. So if it was, 50%, she now is deducting these from essentially, her regular income. So that was a huge tax benefit for her. So with those deductions, we actually were able to generate a paper loss of $120,000 from the short-term rental that first year. And then in her portfolio bucket, she had those $20,000 of long-term gain stock sales. And so we looked through her portfolio to see what losses she had, and we were able to do $20,000. We actually did $23,000 of tax loss harvesting, where we're generating a paper loss from your stocks. She still had the same amount of exposure in the stock market, but we sold those losses, bought back in something that was different from the original sale, and we're able to generate that loss. So she could use $20,000 against her capital gains, and then an extra $3,000 towards her active income. And we also still have the standard deduction here. So we got her active income down to $65,800 and her portfolio income down to $20,000. So let's take a look at what that did as far as her tax burden. So her previous tax burden, she was paying $53,000 on $240,000 of income. Her current tax burden, after all this tax planning, that puts her in the 22% tax bracket, much lower than before. And her approximate tax due was $13,000 on $270,000 of income. She actually had some income from the short-term rental. This was a $40,000 tax savings just from doing a little bit of tax planning. So if Meredith takes this money and she invests it over the next 30 years, growing at an average rate of 8%, this could become $437,000 over the next 30 years. This could fund a big chunk of her retirement just from doing 1 year of tax planning. That's how powerful this can be. This tax planning can be more powerful than getting a second job or starting a side business. And so it's really important to start looking at your taxes and see where opportunities are for you to save money. So the tax bucket formula is a really powerful visualization tool. You hear people, throw around all these tax buzzwords all the time, like depreciation and tax loss harvesting, but a lot of people don't understand how that's actually being applied to their taxes. What is that deducting from? And does it apply to them? Well, when you start putting your income in these buckets, then you start seeing, okay, this is what I need to be taking advantage of with my personal income stream. So you've seen the tax bucket formula in action, and now you can learn how to make it work for you. So we have an easy tax planning for investors course where we cover the deduction strategies that offset income in each of those buckets. So we showed you the income. Now take a look at the deductions. And with those, you can learn how to plan for your optimal tax scenario. In this course, we also cover how to read your tax return, and we go over IRS tax forms that investors should know. Even if you have a CPA, these are the forms that you need to be looking at when you get your tax return back from your CPA. We also have an advanced tax planning for investors course where we go over advanced tax reduction strategies beyond what you typically will see in basic or intermediate tax planning courses. We'll also look at how to interpret K-1 forms. What box is your income coming in? What does that mean? What are those little letters that you see on those forms, and what does that mean? We'll also look at other taxes you may encounter, like the UBIT taxes, the net investment income taxes. There are a lot of other taxes that will apply in different situations for more advanced taxpayers, and we'll take a look at those and how you can offset those. We'll also look at the types of depreciation and the types of depreciation recapture and opportunities for offsetting those also. All right, you ready to learn more? You can scan this QR code to learn about our courses, sign up for our free newsletter, read our blog, and learn about wealth coaching options. This is on risingfemmewealth.com. We are excited to work with you. We love working with women and helping them become empowered around their finances, around tax strategies, to really grow their wealth and create generational wealth for their family. So click here to learn more, and thanks for watching today. Bye.